Hello, folks. So, in today's video, we shall be discussing about the Trump's tariffs, right? What exactly has been the situation around and what implications have been there in the stock markets, especially in the US markets, its impact in the Indian markets. So, specifically, मैं rate of tariffs की बात नहीं करूंगा. I won't be talking about that how much tariffs have been charged over different economies, Vietnam, Bangladesh, India, China. We are aware about all these rates, right? All these rates are being there in the social media. You go to any online website, you go to Google, you go to Wikipedia, you go to RupeeWest, you go to any of the social media platform, you get the rate of tariffs there publicly. So हम rate of tariffs की बात नहीं करेंगे specifically कि कौन सी country पे कितना rate of tariff has been charged, what is the impact upon that specific country or so, right? We shall be talking about a few different things. First of all, we'll try to discuss how this tariff rate came into account, how Donald Trump calculated the rate of tariffs to be imposed upon these economies, be it the emerging economies or the other developed economies. What was the back-end calculation? कैसे उन numbers की calculation हुई, and on the basis of those calculation, the rate of tariff was ascertained. So first of all, we shall be discussing upon that, the calculation or the way the tariffs were calculated. Secondly, we shall be talking about the impact of those tariffs on the equity markets and the fixed income markets globally. That why did we see an X percentage of movement or Y percentage of movement in the equity markets and bond markets? So as of now, on the day I'm shooting this video, we already know that Trump has paused the tariffs. But if we talk about the Chinese markets, it's a to and fro. As of today, Trump says that he has imposed 245% tariffs on China. 245% tariffs on China. And that is not a small number. Overall, the rate of tariffs that were imposed, right, were one of the highest tariffs being imposed historically. Right? इतने ज़्यादा tariffs कभी भी US economy में impose नहीं हुए हैं. So the quantum of tariffs or the rate of tariffs being imposed upon different countries, developing economies, emerging economies, this was the highest. China पे currently starting from 125%, 180% up to 245% पे आ गए हैं. And the Chinese president Xi Jinping has clearly stated that if US increases the tariffs or continues this tariff war, we aren't bothered about the same. हमें कुछ फर्क नहीं पड़ता. They might increase the tariffs to 250%, 280%, 300%, 1000%. We do not care. Because one thing that we have seen, and we also saw it historically around 2017 and 18 during the first Trump's run in US, the quantum of tariffs that he imposed were unable to compact the Chinese exports. So the US had to import Chinese goods because it takes time for any country to manufacture. You might say that you want to build US as the manufacturing hub, that US wants to manufacture everything. जो भी दुनिया में they're importing from China, from Mexico, from Canada, from Vietnam, from Bangladesh, from India, they want to manufacture on their own. But these things take time. It is not certain that if they want to manufacture everything on their own as of day one, they can set up all the factories, all the manufacturing activities and capabilities and production activities and manufacture from day one. It takes years and years and years. In चीजों में time लगता है. It doesn't take one single day. Same thing was done in 2017-18 by the Trump's first administration run. Again, by higher quantum, again, new tariffs have been imposed on China. But China has the biggest advantage, as we all know. It can produce and sell at the cheapest cost. Produce and sell or dump at the cheapest cost in any of the country. Be it manufacturing, be it EMS, be it anything, it can manufacture, produce, and dump at a very cheap cost. And what does the Chinese government or the Chinese central bank specifically do? The Public Bank of China, PBOC, as we call it popularly, they depreciate their currency. They devalue their currency systematically to make it cheaper. And once the currency is cheaper, it tends to encourage exports. They are willing or ready to breach any limit to depreciate their currency by the central bank of their country and encourage the exports. The US imposes tariffs, they depreciate their currency. The US imposes more tariffs, they again depreciate their currency, they devalue their currency. एंड जैसे ही करेंसी की वैल्यू गिरती है, द एक्सपोर्ट्स बिकम चीपर, राइट? बिकॉज व्हाट हैपेंस फॉर द अदर कंट्रीज, their own goods tends to become costlier. And for the home country, if they're buying something from China, from Chinese markets, that tend to become cheaper. चाइना से वो जो भी खरीद रहे हैं उनको वो सस्ता लगेगा, and whatever they're buying in their home country US, उनको वो महंगा लगेगा, right? So Chinese tend to devalue their currency. The central banks tend to devalue, which makes the currency cheaper, and that stimulates exports. Market में और exports होते हैं. Till what time it can be done? Again, that's a question. So all these things are there in the market. अब कौन सी कंट्री में कितना रेट ऑफ टैरिफ लगा है, अगेन दैट थिंग कैन बी फाउंड आउट बाय गूगल. इट्स अवेलेबल एवरीवेयर ऑन एवरी सोशल मीडिया प्लेटफॉर्म, हाउ मच rate of tariff has been imposed until this pause, right? So those things you can find out easily. But how was this tariff calculated? One important thing that we need to know, is this calculation really realistic? Is it important to know? But something as a student of finance, as a student of economics, as a student of geopolitics, we must know that how this tariff calculation has been done. And this formula is very simple. The way this formula has been stated or shared on social media tends to be complicated, but the way we'll try to understand this formula in today's session will be very simple, right? So all the students of geopolitics, simply politics, finance, economics, it's going to be a very great session. The quality will be immense, right? So one thing, अगर हम समझने की कोशिश करें, if we try to understand, in this tariff calculation, see, one thing we know, that as a country, be it any country, be it India, be it China, be it US, be it Europe, be it Taiwan, Japanese country, anything, they tend to export the goods and merchandise. So goods and merchandise is one thing. And the second thing that they tend to export or import is services. So there are two sets of things on which the trade is based. All this trade deficit, trade surplus, trade deficit as a percentage of GDP, all these things are being calculated based upon the export and import of two major things. The one set, the one bucket which I'm trying to create is of your goods and your merchandise. And the second thing which I'm trying to create is your services. Now, in this tariff calculation, whether Trump did, whether all the economists did, or his team per se, जिसने भी ये calculation करी, they took into account just the goods and merchandise. So in this tariff calculation that you see, the rate being quoted for some countries as 46, for some countries as 26 like India, for some countries of 52. The calculation for this tariff number has been based just upon the goods and merchandise exports and not services export. Again, we do not know the reason for that, that why services has been excluded, and no one has questioned that in the market. So tariff calculation may only the export and import of goods and merchandise has been considered. But if services had been considered in the calculation, right? Just make a note of this point. इस बात पे ध्यान देना. If services had been considered in the calculation of this tariff rate, right? US is a net exporter to majorly all the countries, barring some China and few others. When we are excluding services, US becomes a net importer to mostly all the countries, right? I'll repeat this point. In the calculation for tariffs, he has excluded services, the export and import of services. And once this number of services is excluded, US becomes a net importer to almost all the economies, all emerging economies, all developed economies. But if this number of service had been included in this calculation, US becomes a net exporter to majorly all the countries barring China and a few others. So one thing we got to know, कि calculation में services को तो consider किया ही नहीं है. Services have not been included. They have been ignored completely. Now the question comes upon the base or the fundamental of this formula that we're going to study now. अगर services ही consider करी ही नहीं है, does the formula even make sense? Again, that's the question, right? So why these services have not been calculated is something we need to find out. We need to ask the authorities. We need to ask the officials via LinkedIn, via Twitter, via social media platforms कि भाई services क्यों नहीं include करे गए and why the goods and merchandise have been taken. Because अगर services include कर देते, then US is a net exporter, then what's the problem of imposing tariffs? Because the major reason that he has stated that why he's imposing tariffs is he wants to find out that percentage rate via the formula that we'll understand now. He wants to find out that percentage rate that equalizes the trade balances or that makes the trade deficit as 0%. Because when US is importing more, when US is buying from the foreign countries more and exporting less, कि वो खरीद ज्यादा रहा है from the foreign countries and बेच कम रहा है, it tends to create a trade deficit. When your imports are more than exports, it's a trade deficit. When your exports are more than imports, it's a trade surplus. Every country wants a trade surplus. That makes your currency even stronger. But whenever you have a trade deficit, your imports are more than exports. So he wants to have that tariff percentage, the rate of tariff that he has imposed. He wants to have that tariff percentage that will make the trade imbalances neutral, right? Or that would stop creating the trade imbalance, or that will make the trade deficit zero, or the trade deficit zero, that is, export will be at most equivalent to imports. So though the longer term focus is to make America great again, right? The MAGA, as we call it, MAGA, make America great again. But to have to avoid these trade imbalances, to make the trade level neutral, to make exports equal to imports, ऐसा tariff rate he wants to impose that makes the trade deficit nil, null, void, zero. Ab, the formula that he has taken into account. Now, I will show you this formula. This formula seems a bit complicated, but it's very easy to understand. Now, the triangle that you see is the delta, and delta means change. Okay? So, guys, pay attention. This is the formula which has been taken into account to calculate your tariff percentage, कि कितना tariff has been imposed. This triangle is a delta change, that how much change in tariff needs to be done for that particular country to make the trade deficit zero or avoid the trade imbalances. Now, delta T is the change in tariff rate needed, right? X, it represents the total exports to a country. M, it represents imports, correct? So this is exports minus imports divided by this sign of E, right? In terms of statistics or core economics, we tend to call it as epsilon, right? But we won't go deep into it. Simply just state the import elasticity, that how the imports respond to price changes. That, for example, if there's a change in price, right, of the particular goods and services, not services as per this formula, if there is a change in price of goods and merchandise, while the because of the imposition of tariffs, that when the tariffs are imposed and when the price of the goods and services changed, how does it impact the volume being imported? So how sensitive is the volume of the goods and merchandise vis-a-vis the tariffs that affect your price? So once tariffs are imposed, due to the imposition of tariffs, the price changes, right? The prices, of course, increases because किसी भी country पे tariffs तो कम करे नहीं है, सब पर तो बढ़ाए ही हैं, right? How much your demand or how much your volume or how much import from outside is sensitive to the change in the price of those commodities, those goods and merchandise on the imposition of tariffs. Now, this is a phi sign. Just take it as into, it's a multiplication. Into what? Into what is the change in price on imposition of tariffs? Well, what's the price elasticity of that product when tariffs are imposed? So the first thing is, what's the change in the volume when tariffs are imposed? What's the change in the volume of the goods and merchandise that we import when tariffs are imposed? And that gets translated to price into what's the change in price when tariffs are imposed. So your import elasticity or volume elasticity on the imposition of tariffs, which gets translated to price into what's the change in price or how elastic your price is vis-a-vis the change in tariffs. Right? So we'll try to understand this formula. I'll just go back to the whiteboard once again. So यहाँ पे I just went back to the whiteboard. So यहाँ पे firstly we need to see exports and imports. So basically India exports like 2% of GDP to US. India's exports as a percentage of GDP to US is just 2%. Exact like 1.8, 1.9%, but round off 2%, right? But the thing is, it exports 40 billion worth of goods. Our trade surplus to US is 40 billion worth of goods, not services, 40 billion worth of goods. US imports from us 80 billion, right? US imports from us 80 billion. So if we talk about the numerator of this formula, अभी जो हमने formula देखा, if I just talk about the numerator of this formula, We export 40 billion, 80 billion it takes from us, right? Exports minus imports, 40 minus 80 divided by what's the elasticity of the change in volume with respect to tariffs when they get translated to price, कि हमारी डिमांड पर, हमारे वॉल्यूम पर कितना इम्पैक्ट आता है when these tariffs have been imposed. Again, there is a back-end calculation for that number. We won't go into that deep dive. So what happened? The US economist, they researched various kind of the research papers in the past, hundreds and hundreds of research papers. And the elasticity of the change in volume or demand vis-a-vis the tariffs imposed, the number came out to be 4. अब ये 4 कैसे हुआ? It's a back-end calculation as per different research numbers, but they went through different research studies or research papers and they found out that the change or the delta change or simply the elasticity of the change in volume to tariffs is 4. Now, we'll multiply this by what? We'll multiply this by the price elasticity vis-a-vis the change in tariffs. When tariffs are imposed, by how much the price of the goods and merchandise changes. Again, that number that they calculated at the back end is 0.25. So 4 into 0.25, where the different research papers and different numbers were taken into account and they just copy pasted these numbers in the formula. Ideally, they should have explained the rationale because different research papers might have different rationals, might have similar rationals too. But the thing is, majorly all the research papers have taken into account the demand change or demand elasticity to the change in the tariffs as 4 and the price elasticity to the change in tariffs as 0.25. And when we solve this, we get a number as minus 40. Minus 40. Because 4 into 0.25 is 1. And 40 minus 80 is minus 40. So minus 40 by 1, it gives you 40. ठीक है, so minus 40 हमारा आंसर आ गया. अब you have to divide these number by how much imports the US takes into account. So US is importing 80 million worth of goods. So the formula that we saw was the complete formula for the numerator. तो हमने पूरा फॉर्मूला देखा, एक्सपोर्ट माइनस इंपोर्ट डिवाइडेड बाय द डिमांड इलास्टिसिटी और द वॉल्यूम इलास्टिसिटी इनटू द प्राइस इलास्टिसिटी. दैट वाज अ होल फॉर्मूला फॉर द न्यूमरेटर. In your denominator, basically you have your net imports, right? So that is 80. So 40 minus 80 comes out to be half. तो पूरा फॉर्मूला हमने लगाया, हमने सब कुछ कैलकुलेट करा एंड फाइनल आंसर को वी डिवाइडेड बाय द नेट इंपोर्ट्स ऑफ यूएस एंड दैट्स 80. So the answer comes out to be 1/2. Now, you might have heard his speech or you might have heard his lines or quote somewhere that India charges us 52% tariffs. US said or Trump said, India charges us 52% tariffs. But since India is a good friend of us, we'll charge half of the rate. So if India is charging 52%, they charged 26%. And that is the rationale from where this 26% number came into account. You should know the back-end calculation for this 26% number. Very simple. Exports minus imports divided by the volume elasticity into price elasticity and the number that you get divided by the net imports. 40 by 80, half. And half of the 52%. He said India charges us 52%. But Modi ji or India being a very good friend of mine, I'll charge half of what they charge us. That is 52 by 2 or half of 52 or 0.5 into 52, 26% he charged. And that is the rationale for this 26%. Right? So ये हमको समझ आ गया कि from where this 26% number has come into place. अब, now the thing is, taking this discussion forward, not to understand the different rate of tariffs on different countries, but the impact that it had. Stock markets collapsed. Dow Jones fell by 2,000 points. Nasdaq was down. S&P was down. Indian markets were down. The global markets were down. Equity markets were completely down until we had the statement that the tariffs are paused. Because once you had the statement that the tariffs are paused up till this date, the markets rebounded. Beat Nasdaq, beat Dow Jones, beat S&P, beat Nifty, Sensex. Every market mostly rebounded. But here we need to understand is that if tariffs are imposed ideally, what is the economical impact of imposing tariffs? जब भी tariff impose हो रहे हैं, what is the economical impact of imposing tariffs? I've discussed that in my previous videos also. But अभी तक के लिए till this point of time, if you are still there with me, subscribe and press the bell icon. The quality of content that you're getting in here, मैं बार बार repeat करता रहता हूँ, कहीं नहीं मिलेगा. From simplest to advanced topics, we tend to discuss here very simply. No systematic presentations, no visuals, no creativeness, just data, simple data. So please, if you're liking this channel, subscribe the YouTube channel and press the bell icon to get continuous updates, because these kinds of data points, these kinds of videos get to you on your plate at least twice or thrice a week. So वो देखो, वो समझो, and try to share this as much as you can, right, with more people around. ठीक है. अब the thing is, whenever tariffs are being imposed, the major outcome is it will create inflation. Because as I told you, like in the previous few minutes of the session also, it will take time for India to establish, for US to establish itself as a manufacturing hub, to set up capabilities, to set up the production capacities, to set up the kind of, I would say, domains or buildings or factories, infrastructure per se, right? To get the goods manufactured in their home country. But till that point of time, either the quantum of the goods that they tend to import from outside will decrease, like on account of tariffs, China being an exception. But the quantum of goods which they tend to import from the outside countries will tend to get reduced. The demand will still be the same. If I am demanding 100 cars from outside, right, my demand won't come down. But if instead of 100 cars, just 20 get imported because tariffs are imposed now, right, it would be a demand and supply mismatch. And when supply is very less and demand is very high for those limited set of equipments or commodities, the price rises. And when price rises, it tends to create havoc and inflation. Again, that's a problem. When inflation will rise, right, on account of tariffs, because supply will be less and demand will be high, it can also reduce the growth in the economy. Because what is basically happening, your inflation is rising and growth is falling. Because infrastructure facilities, capabilities cannot be made in just one single day. It will take time. For medium term to 1 year basis, or like 1.5, 2 years basis, the growth will come down. And it can create a situation called as popularly stagflation. So what is stagflation? Stagflation is nothing but it is high inflation and low growth. Inflation is very high, but the growth is very low. Does the US really want that? I'm not sure the US wants it, but Trump wants it. Why? Because he wants the Fed to reduce the interest rates. He wants the Fed to reduce the interest rates. And that is why we are seeing a debate between Mr. Jerome Powell, the Fed chair, and Trump also. And people have started to question the independence of Fed. Will the Fed really make a decision based upon their own judgment or listen to Trump? Because Trump is threatening to fire like Mr. Jerome Powell, though he can't, but all these things are there in the market. He's tweeting at 3:30 a.m. in the morning US timing, right? That these interest rates have to come down. If Jerome Powell doesn't do it, he will fire, right? So all these kinds of fights and all like are being there on social media, on X, Twitter, XYZ kind of stuff. But Trump really wants the interest rates to come down. He's a businessman, and part of his tariffs, all this was just a business game for him, to be honest. He wants high inflation, like ideally, like he doesn't want high inflation, but he wants a controlled inflation with low growth. And when there is low growth, the Fed has to reduce the interest rate, because currently we are seeing there's a fear of recession. 60% probability of the fear of recession in US. The interest rates have to come down, and that is where the Fed is a problem for the Fed also, like whether it controls inflation or it reduces the interest rates to control growth. So ideally, it's a quagmire. The Fed is stuck somewhere between inflation and growth. The tariffs have been paused because Trump realized if tariffs are imposed drastically, systematically, right, एकदम से वो tariff डाल देगा, inflation will be very high and the growth might come down. And अगर inflation बहुत ज़्यादा बढ़ गई, the Fed might not reduce the interest rates. And he wants the interest rate to come down because the major reason is he has to service trillions and trillions of debt in the upcoming months. Next 4 years, he has to commit to more than like 30 trillion worth of debt. July, August, maybe that debt is getting due. So before that, he wants the rate of interest to come down. And if the rate of interest doesn't come down, either the debt has to be refinanced at a higher rate or it has to be repaid. And again, that's a trouble for US. That's a trouble for the Senate. So the interest rates come down, they shall be saving billions and trillions of dollars per year on their interest commitment. So one way is they want to have the Fed to reduce the interest rates, to get their interest commitment being reduced, so that the liability of their commitments is less on the fixed income securities because the majorly debt is the foreign debt. US, the majority of the debt in US is foreign debt. It has to service those debt. Otherwise, they will sell off the bonds. And the economy which is selling off their bonds by highest margin is China. China have been dumping their bonds. In billions and billions of dollars worth of bonds have been dumped by China. One more thing that we saw in here, US always enjoys a reserve status, a reserve currency, a safe haven, because what basically happens in the fear of recession, as we can see currently, in some black swan events, people rush and buy the US dollars. And one way to buy the US dollars is by purchasing the US bonds. Because when you have to purchase the US bonds, you have to sell off the home currency and purchase the USD. And that even makes the USD much more stronger. So we have seen the levels of USD falling from like 110 to 99, around like 100 as of now, right? That again stimulates the Indian markets, and many of the FIIs can come back to the Indian markets per se. And we have seen buying worth like 4,000, 5,000 crores as of Friday in the morning, as of Friday, I would say like 17th of April 2025, the FI is buying worth like 4,000 to 5,000 crores. So that thing is something separate, like we can discuss about that in a separate video. But the thing is, people tend to buy those bonds and the USD becomes stronger because they're purchasing USD and selling off their home currency. Correct. But the thing is, this time we saw bonds getting sold off. Why? There is something which is called as the basis trade. BASIS, basis trade. What basically happens in this basis trade? We're trying to profit out in the fixed income market between the spot price and the futures price of the fixed income securities, especially bonds. So what basically happened, many of the investors, because it's not investors, mostly traders, because traders tends to come into this basis trade, investors stay in the market for long term, for years and years. They believed that the price of bonds will rise in the market. And what was the reason they believed the price of bonds will rise in the market? Because tariffs will impose uncertainty, some geopolitical tensions, there might be fear of recession, and all those things people will purchase the USD, and the only way to purchase the USD is buying their fixed income securities, especially bonds. So they took long positions in bond futures, in bond forwards. Bond futures on the listed exchanges, bond forwards on the unlisted markets. Forwards is unlisted, futures is listed. So though the backend concept, how they work is just the same. So basically what they did, they entered into long bond positions, bond futures. They bought the bonds in spot market and they had their mindset or their calculations to sell off the bond futures once the price of bond rises, because the fear of recession shall be there. US being a safe haven, people shall purchase a USD, and to purchase USD, the best way is to purchase the US bonds. वो bond trade में आ गए. They purchased the bond spot and they had the idea to sell off the bond futures. But what happened when all these geopolitical tensions came into account, the fear of recession came into account, people didn't buy the US bonds. So a few of them bought, but many of them sold off because their trust on USD as a safe haven is eroding. They want to make some other currency as a safe haven, or they want to make their own currency as a global trading currency, because US cannot control everything. It interfered in the Russia-Ukraine war. It interfered in the Iran-Hamas situation kind of stuff. Like whenever there's a tension between India and China, it interferes. Whenever there's a tension between like India and Pakistan, it has its own views, right? Now, US is starting to think that it wants to come out about all these things. For all of those like who have read the book or watched the videos of Ray Dalio, right? He talks about the New World Order. Earlier, we had the British, then we had the French, and then we had the US. So it's a cycle. New economies, new countries tend to come into place. Their currency becomes stronger. And like one time comes when they had to go out. The other economies become much more stronger and they kill that strongest economy and some new economy becomes a winner. Now, the other countries do not want to depend upon US for anything. They're increasing their gold reserves. They do not want US to interfere in any of their geopolitical matters. US has also said personally to the Europe to spend on their own for all the military expenses, because US personally also wants to come out of all these things. It can't maintain peace. It can't like interfere like in all these nations because it's also facing the problem of mounting and mounting debt, $37 trillion. It wants to come out of all these things. So when less people will purchase their US bonds, the amount of debt the US will have will also be less. So kind of an outward strategy or an indirect strategy in which the US government also wants the people to purchase less of their bonds. Because जितना bond खरीदेंगे, उतनी their interest liability will increase, उतना debt will increase from $37 trillion to 40 to 50. And one time will come that the US market will collapse and some other economy will take the place of US, be it like China or Europe, India per se maybe. Right? And the same happened with the French economy, the Dutch, the British in the past. They're mounting debt. They used to print money, inflation, growth come ho gayi, and all that debt ceiling crossed. And then there were wars, there were trade tensions, and new power emerged. And then the new power again made the same mistake. So those things ideally we need to understand. So वही चीज यहाँ पे हो रही है. So basis trade में यही हुआ, people started to sell off the bonds, and once they started to sell off the bonds, the trade turned against their expectation, because the expectation of the traders were the bonds price will rise, but they fell. अब क्या करें? अब जब बॉन्ड प्राइस वो बॉन्ड्स को बेचने लगे, बॉन्ड्स का प्राइस गिरने लगा, they had to incur the margin calls. The exchanges, they started to call them, आप अपना मार्जिन भरो, because the underlying of these securities as the collateral, they tend to supply the fixed income securities like bonds or commodities. अब इनके पास margin call आ रही है, they have to fulfill the margin call. To fulfill the margin call, they indeed sell off their own fixed income securities and commodities, like which were the collateral or the underlying. See, people were already selling off the bonds in the market, and once they had to answer to this margin call, because the trade reversed against their expectation, they expected the bond price to rise, but the bond price fell. To fulfill those margin calls, they had to sell off the collateral, and the collateral was nothing but the bonds and commodities. So bonds तो लोग already बेच ही रहे हैं, but when this margin call came into account, they had to indeed sell off their commodities and bonds by much more quantum, and hence the bond market collapsed. And we always know, as my students, as the students of my channel, I've talked about one concept of duration. It talks about the inverse relationship between the price of the fixed income securities, right, and the yield on those bonds. When bonds started to sell off, the price of bonds crashed, the price of bonds came down, and the yield commanded upon the fixed income securities, it began to rise. It rose to 4.4, 4.5, the 10-year bond. And again, that is something which was against the expectation. People wanted the interest rates to come down and the bonds to rise, because Trump का भी यही था कि like there shall be some fear of recession, people shall purchase the bonds, the price of bond will rise, the interest rates will come down because of the concept of duration, which talks about the inverse relationship between the price of the fixed income securities and yield. Interest कम होंगे, Fed को और chance मिलेगा to reduce the interest rates further, and the interest commitments will come down of the US government. Again, all these things have come into account. So people are trying to stay away from the US dollar. They do not want to make it as a reserve currency. So all these things trade took into account. So one thing is that we have to search for, like once I conclude the session, is that why services were not included, right? And all this calculation, all these numbers came into place. We need to understand this formula indeed as a student of finance. कि formula कैसे calculate हुआ है. If someone asks you in the interview, or like maybe like in some kind of client presentations you want to give, that how this tariff rate was ascertained, you should know that how this tariff rate was ascertained. And secondly, what is basis rate and why the bond price didn't rise even after these geopolitical tensions. Why the USD didn't rise even after these geopolitical tensions? Because USD is a safe haven. And दुनिया में कुछ भी होता है, people run to US, they buy their fixed income securities, and once they buy it, they have to buy USD, because USD has to be converted. They have to buy USD, sell off their home currency, and the USD appreciates, the USD index appreciates. But this time it did not happen. The interest rates come down, they have to service trillions of debt. All these things we need to know what's happening in the markets from an equity point of view, from a fixed income point of view. So ideally, bonds are pricing everything. To be honest, equity markets are not pricing anything. They can just price the fundamentals. They can just price the sentiment. Equity markets can just price the fundamentals. If a company is strong long term, the stocks might grow. If a company is weak, it might fall, or it might price the sentiments. Some positive news, the market will rise. Some negative news, the market will fall. But the bond market or the fixed income market, being a super complicated market, is one market which is pricing all these kinds of debt bound, all these kinds of trillions of debt commitments, inflations, interest rates, tariff, basis rate, everything the bond market is pricing in. If you want to know about the current state of economy or what exactly is happening in the economy, look at bonds first and equities later. because the fixed income market prices everything. Currently, it's pricing a kind of a recession, right? It's pricing a recession because the bonds price are falling, the interest rates are rising, there are trillions of debt, the growth has come down because these tariffs will impact the global growth by 1.6%. बहुत सारी countries के the estimates of growth have come down by 0.6 to 1%. They've corrected their forward GDP growth. One more thing I will tell you, like before I conclude this session. We talk about the SOFR swap spreads. Security offered financing rate, SOFR. Earlier you had the LIBOR, the London Interbank offering rate. It got exchanged by SOFR because SOFR prices your swaps, your overnight interest agreements, your future agreements in a much better way as compared to LIBOR. I can make like one more session on SOFR and LIBOR, right? But SOFR, it replaced LIBOR like 3 to 4 years back. Now you have something called as a SOFR swap spread. SOFR swap spread. So it takes the difference between a swap, how much a swap is yielding you, minus a US Treasury rate. Swap ka interest rate minus a US Treasury rate. SOFR swap spread very popularly being used in US. We also use something of that sort in India, right? Of that sort in India. Swap spread minus corporate spread, right? And that has widened. Swap spread, जो भी swap का रेट है इंडिया में और जो corporate bond का रेट है, swap का रेट minus corporate bonds rate, that has widened, right? That has widened. And that indicates tightened liquidity conditions. But if I talk about US, right? So what is basically happening? Here, I'm comparing the swap spread, the interest rate on swap, to the US Treasury yield. इंडिया में मैंने डिफरेंस निकाला था स्वॉप के इंटरेस्ट रेट का एंड कॉर्पोरेट बॉन्ड का. Watch my previous sessions. I've told the difference. Yield spread and the credit spread, both of them are different. They're not the same. Yield spread is the difference between a 10-year treasury US bond or India bond minus a 5-year treasury bond or US bond. If the yield spread expands, it creates a positive outlook in the economy. No recession or less recession ka fear. When it compresses, it indicates the fear of recession. And the vice versa happens in case of a credit spread or a corporate spread. When that spread widens, it indicates the fear of recession. When it compresses, there is no such risk or less risk. So यहाँ पे I am comparing the swap का yield, the US 10-year का yield. It has compressed. It is becoming almost negative. And when the yield spread compresses, there is a fear of recession. It indicates tighter liquidity conditions. Liquidity conditions become much more tighter. Right? So that is one thing. Liquidity conditions become much more tighter. There's less liquidity in the market because interest rates are also rising. Right? So that is one thing. So this spread, your SOFR swap spread, which is the difference between the interest rate, the swap yield minus the US 10-year yield or a 5-year yield. Basically, I would say compare with a 10-year yield. Because a 10-year prices is expectation much more. A 2-year yield or a 5-year yield is much more good for traders. For investors, a 10-year yield is a much more better trade. Spread is becoming negative. And again, that is indicating a fear of recession. Again, that's also one more thing. Right? So all these things we should know. That all these things are governing the US economy and the implications on the Indian markets. Now, this video has been very long. I would just suggest everyone is video को फिर से देखना, बार-बार देखो. Right? Try to understand the concepts and come back to me for any queries until we meet next time. But till that time, subscribe and press the bell icon. The content that we're trying to bring is super amazing, right? And share this channel, share these videos with as many people as you can. So thank you so much. See you soon.